If you're like most Michigan homeowners, property taxes can feel like a confusing mystery. In this video, we're going to uncover the secrets behind Michigan property taxes. We're breaking it all down to make you a property tax pro. Property taxes are Michigan's way of keeping our schools running, roads kind of drivable, and parks enjoyable. They're based on your property's value, but calculating them is where it gets really interesting. It's kind of like a seesaw balancing act. State equalized value is 50% of your home's market value according to the local assessor's office. Taxable value, on the other hand, is what you're taxed on, and this is where the Headlee Amendment comes in. The Headlee Amendment was signed into law as part of the Michigan Constitution in 1989 as Michigan's way of keeping property taxes fair, but also keeping longtime homeowners from being taxed out of their homes. If property values rise, the Headlee Amendment helps the tax rates adjust down to prevent a huge spike in taxes. The Headlee Amendment puts a cap on how much your taxes can increase yearly. It can only be increased by the rate of inflation or 5% annually, whichever is lower. This happens year after year until your home changes owners. Then, surprise, the taxable value uncaps. Here's the thing about uncapping. When a property changes hands, the taxable value resets to the SEV. So now they match again, which often lead to higher taxes for the new homeowner. If you're buying or selling, get ready for a curveball. What a lovely housewarming gift this is, right? So here's a little story for you. I help clients with this every day. But in January of 2022, my husband and I sold our Raise the Family home and decided to right size into a home that fit into our new season of our lives. He had retired and was not interested in shoveling snow or mowing lawns, and our acre of land was not what we needed anymore. I help clients calculate the uncapping increase, and I did that for myself. But I had no idea what the rate of inflation was going to be at the end of the year. So not only did I get a new tax rate when the SEV uncapped because of the sales price, but the Headlee Amendment was removed and taxes increased at a rate of inflation for the year, 7.9%. The only variable in this is the rate of inflation. In January, when I purchased the home, I could have gotten a mortgage at just under 4%, and the rate of inflation was under 5%. So it looks like a great time to buy, right? Who knew the interest rates would be 8% 12 months later and the inflation rate would be 7.9% at the end of the year? It was a perfect storm, and I was not prepared for that storm when it arrived. Now, I did get the homestead exemption, and we will talk about that in the next section. And that helped decrease the tax bill by about 20%. But when I opened my new tax bill, my head almost exploded. I expected higher taxes, but not $2,000 higher. The previous owner had lived in the home more than 30 years, and the capped SEV, or state equalized value, was quite low. This is why I tell buyers, what the taxes are for the sellers makes no difference to you. It matters what a buyer pays for the house. That's what they tax you on, what you paid for the home. So take it from someone who just did this. It can catch you off guard. After the first tax increase, the Headlee Amendment caps taxes and gives you predictable property taxes, which means you can budget better. But here's the thing, it's not a perfect system. If millage rates roll back too far, like they did when our property taxes lowered during the recession of 2008, local governments can't raise enough funds for schools or services, and they might ask voters for a millage increase to make up the difference. Now let's talk about how to figure out your millage rate. Don't worry, you won't need to be a math whiz to do this. I promise it's pretty easy. A millage rate is the amount you pay in property taxes per $1,000 of taxable value. So here's the formula. Your millage rate times your taxable value divided by 1,000 equals your property tax bill. So for example, let's say your millage rate is 45 mils or 0.045. And your taxable value is $100,000. The equation is 0.045 times 100,000 divided by 1,000 is $4,500 in annual property taxes. See, that wasn't so hard. If you're curious about the local millage rate, the state of Michigan has a handy site where you can find millage rates for every city and township in the state. The link will be in the description below. The final deduction that you can take on your property taxes is the homestead exemption, also known as a principal residence exemption. It lowers the taxes you owe, saving you money. But like all things in government, there are rules to it. You can apply for this exemption, which removes the local school operating tax, usually around 18 mils, and that's a significant savings, 20% or so, usually. However, this exemption doesn't apply to rental properties, vacation homes, or secondary residences. There is a catch with the homestead exemption. Not every municipality in Michigan offers this exemption. If you're considering buying a home, check with the local assessor's office in the city or township the home is in to confirm whether the homestead exemption applies. Missing out on this exemption could significantly increase your tax bill. You only have 45 days from the date of closing to let the township know that you are applying for the homestead exemption. After that, cities begin charging $5 a day, and it can add up really quickly. That's Michigan's property taxes in a nutshell. It may be a bit complicated, but it doesn't have to be overwhelming. If you've got questions, drop them in the comments or reach out to me directly, and I'll see you on the next video.